If you own silver, stop everything and pay attention, because what I'm about to reveal could change everything before the markets even open today. Prices aren't moving randomly, and what's coming could impact your investments in ways you never saw coming. Every second you wait, the opportunity slips further away. This isn't fear-mongering, it's insight, strategy, and timing. If you want to protect your wealth, if you want to ride the wave instead of being crushed by it, you need to see this now. Forces driving silver today aren't just numbers on a chart. They're human behavior in motion, the psychology of desire, fear, and ambition. Men watch markets with a hunger for control, a need to dominate outcomes, to prove foresight. They analyze trends, rumors, and patterns, but even the sharpest among them can be blindsided by forces they can't see, by the invisible currents of collective emotion. Women, on the other hand, often sense shifts intuitively. They notice the subtle changes in tone, the hesitations in news cycles, the small signals that indicate larger movements. They understand risk not just as a financial concept, but as a human one, how it touches lives, stability, and relationships. When silver moves, it's not just an economic story, it's a story of confidence and doubt, of calculated courage versus hesitation. The market reflects our impulses. When men react aggressively, driven by pride and the fear of missing out, prices spike. When women weigh decisions carefully, balancing instinct with insight, trends stabilize or accelerate in unexpected ways. Understanding these human forces, the pride, the instinct, the calculated patience, is what separates those who are merely observers from those who act decisively before the market opens. Wall Street thrives on information and balance, on the fact that most people react before they understand. Men often feel the pressure to act fast, to show decisiveness, to prove they can outsmart the system. That pressure can cloud judgment, making them susceptible to moves designed to trigger fear or greed. The market exploits that impulse, nudging emotions before logic has a chance to intervene. Women, by contrast, tend to pause, observe, and sense the patterns beneath the chaos. They notice what isn't being said, the stories that are hidden behind press releases and analyst reports. While men chase headlines, women often track context, subtle trends, and inconsistencies that reveal the truth Wall Street doesn't want anyone to see. The system is built to benefit those who control information and punish those who follow it blindly. Men are drawn to action, and that attraction is used against them, while women's intuition allows them to question the narrative, to see the gaps, the opportunities that others miss. Every fluctuation, every sudden spike or drop is tied not only to supply and demand, but to human psychology, the fears, the ego, and the instincts that Wall Street quietly manipulates in ways most investors never notice. In the world of silver, timing isn't just important. It defines who wins and who loses. Men often feel a constant pressure to act quickly, to seize the moment, to assert dominance over circumstances. That urgency can create a double-edged sword. Decisive action can lead to gains, but hasty decisions driven by ego or fear of missing out can result in missed opportunities or losses that linger far longer than expected. Women often approach timing differently, blending patience with intuition. They observe the undercurrents, noticing subtle shifts before the headlines scream. While men may react to noise, women detect signals, patterns, and behaviors that reveal when a true opportunity is emerging. This awareness allows them to move deliberately, aligning action with insight rather than impulse. Markets move first in the minds of those who understand the psychology of others. When collective emotions shift, fear tightening its grip or greed pushing the pulse, prices follow almost instinctively. Men may feel compelled to act immediately, racing against the clock, while women often sense the momentum building and prepare to move at the exact moment that maximizes advantage. Timing, in this way, is less about the clock and more about understanding human behavior before it manifests in the numbers. The next spike in silver prices won't come from what you expect. It will come from a trigger few are watching. Men often react to obvious signals, headlines, and trending news, believing that action must follow visibility. This mindset can make them vulnerable, rushing to buy or sell only after the market has already moved, driven by the need to appear ahead of the curve. Women, on the other hand, notice the subtler forces at play. They sense shifts in tone, hidden patterns in trading volumes, and small changes in sentiment that often escape immediate attention. While men act on urgency, women often act on awareness, moving in alignment with the forces before they erupt publicly. The market thrives on collective psychology. A single announcement, a seemingly small policy change, or a sudden shift in investor confidence can ripple through silver pricing like a tidal wave. Men may feel compelled to respond instantly, driven by pride or fear of missing out, while women are more likely to anticipate the reaction, positioning themselves to act with precision. Understanding this invisible trigger, the one Wall Street counts on most, requires seeing beyond numbers into human behavior, instincts, and the subtle cues that foreshadow sudden movements. Protecting your silver holdings isn't just about numbers, it's about understanding the human tendencies that drive market chaos. Men often feel the pressure to act decisively, to assert control when uncertainty rises. This instinct can lead to bold moves that either pay off spectacularly or backfire completely. The problem is that action without insight becomes reaction, and in volatile markets, reactions are often costly. Women frequently approach protection differently, blending awareness with calculated patience. They evaluate risks not only in financial terms but in human terms, understanding how fear, greed, and impatience shape the decisions of those around them. This perspective allows them to anticipate moves, to shield their holdings, while the less attentive rush into or out of the market, creating turbulence. Chaos in silver markets is rarely sudden. It emerges from human behavior. Panic selling, impulsive buying, and herd mentality amplify small shifts into large swings. Men may feel compelled to fight against the tide, reacting emotionally, while women are more likely to observe the currents, adjust their positions, and let opportunity and safety align. True protection requires knowing not just the market, but yourself and the psychology of those influencing it. It's about recognizing triggers, understanding timing, and resisting the temptation to mirror the mass emotion. Men often learn this through experience, testing instinct against outcome, while women often sense it, reading subtle cues that precede volatility. In both cases, the key to safeguarding holdings lies in seeing beyond the charts to the behaviors that drive them, and positioning yourself ahead of the storm. Opportunities in silver are rare because they require more than knowledge. They demand awareness of human behavior. Men are often drawn to action, chasing momentum, wanting to be first to prove themselves. That drive can be a strength, but it can also blind them to subtle openings that require patience and observation. The fear of missing out pushes many to follow the crowd, buying at the top and selling at the bottom, while the true opportunity slips quietly past. Women approach opportunity differently, sensing it in the spaces others overlook. They notice shifts in sentiment, small inconsistencies, and emerging patterns that reveal where advantage will appear. While men may act on visible trends, women often move based on anticipation, aligning insight with timing. This approach allows them to seize moments before they erupt into headlines, capturing value while the majority reacts emotionally. The market tests psychology constantly. Men respond to urgency, pressure, and competition, measuring success in immediate gains, often overlooking the larger picture. Balancing intuition and analysis. Read the behaviors that drive those gains, positioning themselves in ways that men cannot see until the move is complete. Every spike, every dip, every sudden surge in silver is tied to collective human impulses: fear, greed, pride, hesitation. And the few who recognize this can act decisively when others are distracted. Seizing opportunity is about courage paired with awareness. Men often learn it through trial and error, testing instinct against consequence, while women often sense it, understanding the patterns and waiting for the precise moment to act. The few investors who see the forces before them, who understand the psychology behind the price, are the ones who position themselves to capitalize while others panic or hesitate. The question isn't whether opportunity exists. It's whether you recognize it when it appears and whether you have the discipline to act while others are blind.